In today's video, guys, I'm going to show you guys step by step what I look for in the market before I place a trade. This video is pretty much going to be a summary of all the previous videos that I recorded for you guys. Like I said it before in the previous videos, I look for at least 3 confluences or more before I place a trade. And I'm going to show you guys exactly what I look for before I place a buy or a sell. So please pay attention to this video and make sure you guys watch it over and over and over again and go to a demo account and practice it as well, right? First thing first, guys, before you do your TAs, which is your technical analysis, before you place a trade, make sure you go and check out if there's any major news event dropping out, right? So, for example, if you're trading CAD JPY, make sure you go to FX Factory or my FX book and look for the red folders for the JPY, which is a Japanese currency, or CAD, which is a Canadian currency, to see if there's any major news dropping out, either for the Canadian currency or the Japanese currency. So you go to Google and you type my FX book, right? And then you scroll down and select the economic calendar. There, you'll be able to see all the green, orange, or red folders. Right. So for example, if you're trading Euro USD, Euro CAD, you should be looking for Euro red folders, right? So if you're trading CAD JPY, all you got to do is scroll down and look for any CAD red folders and the JPY red folders as well, right? As you can see right here, right, we have interest rate decision dropping out in 2 hours and 7 minutes, right? Which is a high impact news. So let's say if you are trading CAD JPY and you're in positive and you're in deep profit, I would definitely suggest to take some partial profit and to move your stop loss at break even to make it risk free. News does not respect technical analysis. News can literally go against you and you might lose the trade. So, right, if you're trading CAD JPY, if you're in the profit and then you go and check my FX book economic calendar, once you realize there's a high impact news red folder dropping, you actually take some partial profit and also make sure you move your stop loss to break even. And let's say if you're in deep negative, then you have the option but to hold it through news, right? But if you're in positive, I would say to either manually close the trade or take some partial profit. And at the very least, if you're in deep positive, make sure you move your stop loss to break even. So that way, if the news goes against you, you won't lose any money, right? So that's the first thing you got to do, right? Let's say if you're planning on trading CAD JPY, and before you do your technical analysis, you go ahead and check if there's any JPY or CAD news dropping. And the minute you realize there is news coming out in 2 hours and 6 minutes, right? And all you got to do is, and then wait after like I'd say 20 minutes after the news drop, then you can go ahead and start trading CAD JPY, right? So do not place a trade before a red folder news. So the best way to go about it, you can easily analyze CAD JPY. You just sit it out and wait after 2 hours and 5 minutes and see what the news come out to be. And then based on that, you can make a decision to trade it or not. Right. So it is very crucial, guys, before you do your technical analysis to check for red folders, right? If you're trading CAD JPY, all these are red folders, right? And so on and so on. If you're trading Euro USD, all these are red folders for euros, right? All right, guys. First thing I usually do, like I've stated before, I start my analysis on the highest time frame possible because I consider myself as a swing trader and sometimes I also day trades. So I start my analysis on a monthly time frame. On the monthly time frame, guys, all I do on the monthly time frame is add my key support and resistance levels, right? Or demand and supply, right? So I'm going to add a level right here, right? Because we know for a fact that every time the market goes for that level, which is 103.340, as you guys can see, the market dropped to 103.340, rejected, 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 and it is now currently going up, right? 1, 2, 3, 4, 5, 6, 7 rejections, right? Then I'm going to do the same thing at the very top right here, right? Reject, 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 so on and so on and so on. Literally, all you have to do on the monthly time frame is to place your key supply and demand levels, right? Now I'm going to scroll down to the weekly time frame, guys. On the weekly time frame, what I look for is the overall trend of the market, right? As you can see, the market is currently trending up on the weekly time frame, right? Zoom in even closer, you can clearly see that the market is currently trending up, right? So that's the first thing I do on the weekly time frame, right? I do not counter trade. If the market is trending up, I'll be looking for buys. If the market is trending down, I'll be looking for sells, right? So on the weekly time frame, what I do is zoom out to make sure I get the overall trend, right? So now I'm going to scale down to the daily time frame, right? The daily time frame, guys, this is where you should be spending the most amount of time doing your technical analysis because most of you guys are going to be day traders and some of you guys are going to be swing traders, right? So make sure you always take your time to analyze the daily time frame properly, right? And also the first thing you gotta do in the daily time frame as well to also make sure that daily trend matches the weekly trend. And as you can see, it is currently trending up, which means the daily trend matches the weekly trend, which means you should be looking for nothing but buys unless if there is a break of the trend and also a break of structure, right? So the minute we know the daily and the weekly is in the uptrend, our next step is to start placing our key structures, right? And to do that, all you got to do is go to insert, grab your rectangle boxes where you're going to place your key structures, right? It's going to be a low, right? It's going to be a high, right? It's going to be a higher low right here, right? It's going to be a higher high. It's going to be a higher low. And then there's going to be a higher high, right? Guys, and in the uptrend, guys, you're going to get higher lows and higher highs, right? Low, high, higher low, higher high, higher low, higher high, right? So all you have to do is to wait for the market to drop to create the next higher low for it to get in, right? We're not looking for sales because we know the market is currently in an uptrend. The reason I trade with the trend is because, guys, we do not have enough capital to place a sell and for the market to stop dropping and goes away. This is why, guys, we trade with the market, we don't trade against it. So now you might ask yourself, how do you know precisely where the next higher low is going to be created? And this is why we use something called the Fibonacci retracement, right? Some other traders might use different levels, but I use my own specific levels because I back tested it for years and it has been working for me, right? You gotta go to insert, grab the Fibonacci retracement, place it from the low all the way to the high, right? So it's going to be from the 100% all the way to the 0%. And you'll be waiting for the market to create some type of support level, some type of structure, which is the high low between the 50 and the 61% level. As you can see, the market retrace, 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 retrace. The minute the market goes for the 50 and 61% level, guess what happened? Reject, 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 reject. The more rejections we see at the 15, 61% level, the better it is for us because that is a clear indication telling us that the market is not trying to go past below the 50 and 61% level, right? That's what you got to do, right? You place your fib from the low to the high and you wait for the market to create some type of higher low for you to get in. But yet again, guys, do not place a buy or a sell as soon as the market goes for the 50 or 61% level. You need to wait for the market to create some type of support level if you're looking for a buy, and you need to wait for the market to create some type of resistance level at the 61% level if you're looking for a sell. As you can see right here, we have one, two, three, four, five, six, seven touches between the 50 and 61% level, which is a clear indication that the market is not trying to go past this level, which is a good indication for us to start looking for buys, right? So that's the first thing you gotta see at the 50 and 61% level. And then let's say if you miss that buy, guys, right? And this is why I keep on telling you guys, you got to be patient, right? Let's say if you miss that buy and then you see the market went all the way up to create the next higher high. So all you got to do, guys, right? Grab your fib again, place it from the most recent higher low to the most recent higher high. And then you're going to have to wait for the market to create some type of support level at the 15, 61% level for you to start looking for a buy. As you can see, the market went all the way down again between the 15 to 61% level. Give you one, two, three touches there at the 50% level, right? So that's what you must see on the daily time frame, right? Let me quickly summarize what I just went over, right? On the daily time frame, guys, that's where you'll be placing your key structures, right? The higher lows and the higher highs if it is in an uptrend, the lower lows, the lower highs if it is in a downtrend, right? And you'll also be placing your fib from the most recent higher low to the most recent higher high. And you're going to wait for the market to drop between the 50 and the 61% level. You must also see some type of support being created at the 50 and the 61% level for you to start looking for a buy, if that makes sense. That's the daily time frame, right? But yet again, guys, when it comes to technical analysis, you have to be as technical as possible, right? Yes, we have all these confluences on the daily time frame, right? But we do not place the buy or the sell on the daily time frame. So now you have to scale to the 4 hour time frame, and also you have to scale down even more to the 1 hour time frame. The 1 hour time frame, that's where I place my buy or my sell. So I start my analysis on the highest time frame possible for monthly, weekly, daily, and then I'm going to scale down to the 4 hour, right? So let me zoom out. This is where we're currently at, guys. On the 4 hour time frame, guys, what I look for is some type of momentum, right? So if you zoom out, you can clearly see after the market created the higher high, the market started retracing, 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 going down, which means sellers are in control. But we know that the overall trend on the daily, on the weekly, is bullish. So we do not care about the small downtrend on the 4 hour and the 1 hour time frame because we know the minute the market goes for the 50 and the 61% level, it is going to react to it and create a higher low, right? We do not trade the 4 hour trend or the 1 hour trend. We trade with the daily trend and the weekly trend, if that makes sense, right? The 4 hour time frame, guys, as you can see, right? Sellers are in control, sellers are in control, sellers are in control. But if you zoom all the way out, guess what, guys? It is an overall uptrend. So we're not interested on going against the trend, right? So what I do on the 4 hour time frame, guys, right? I'm going to wait for sellers to lose momentum at the 50 or the 61% level. As you can see, as the market is dropping, the market is approaching the 50% level. As you can see, sellers are in control, sellers are losing control, buyers are coming in, buyers are coming in, and then now buyers took over. That is a bullish engulfing, right? Telling you that buyers took over. And then that's when you should be like, okay, you know what? I took my time to analyze the monthly, the weekly, the daily, and I scaled down to the 4 hour time frame. And I got my confirmation on the 4 hour time frame that buyers finally took over. Now it is time for me to start placing my buy and for me to start placing my stop loss and my take profit, right? On the 4 hour time frame, guys, I look for a bullish engulfing if I'm looking for a buy, and I look for a bearish engulfing if I'm looking for a sell, right? And guess what, guys? That is still not enough. The more confluences you have, the better, right? So now I'm going to scale on the 1 hour time frame, right? So on the 1 hour time frame, guys, all you got to do is literally grab your trend on the 1 hour time frame because we know the 4 and the 1 hour is going to be on a small downtrend. But yet again, we do not trade the small downtrend because we already know the market is bullish on a daily time frame. That makes sense, right? So I'm going to grab my small downtrend. So I'm going to draw my small downtrend, right? Guess what, guys? I'm going to wait for the market to break above the small downtrend to retest it. That should be the ultimate confirmation telling you the market is going to go bullish, right? The reason we draw the small downtrend on the 1 hour time frame, guys, is because we need to make sure that the 1 hour is in an uptrend, the 4 hour is in an uptrend, the daily is in an uptrend, and the week is in an uptrend, right? Yes, we knew the weekly and the daily were in an uptrend, but if the market is retracing to create the higher low, during the retracement, you're going to get a small downtrend on the 4 and the 1 hour time frame, right? That's why we scale down to the 1 hour time frame. We look for momentum, and we know that the 4 hour time frame is probably going to give you some type of bullish engulfing telling you that buyers finally took over. Then you scale down to the 1 hour time frame and you draw your small downtrend and you wait for a break and a retest. Then that can possibly be your second entry, right? Let's say if you decided to get in at the 50% level, the minute you realize the market break above the 1 hour downtrend, then you can possibly add a second entry. But to be honest, I'd probably wait for the market to break above the 1 hour downtrend. Then I'd probably place my buy on this area, stop loss below the previous high low, take profit will be here, TP1 will be at the previous structure, and TP2 will be at the minus 27, which is where your higher high is probably going to be created, if that makes sense, right? So if you place a buy between the 50 and the 61% level, your TP1 always got to be at the previous structure, which is at the 0%. The 0% will be your TP1, right? And then TP2 will be minus 27%, right? Let's say if you place your buy right here, your TP1 should be at this level right here, which is the 0%, which is going to be at 106.868, right? And your TP2 should be at the minus 27%, right? If you did take this trade, you definitely would have made money at TP1 and also at TP2, right? So, and your stop loss will be below the 61% level, below the previous high low, and all you got to do is wait for the market to go to smash your TP1 and TP2, right? So this is exactly how I trade, guys. So I place my keys for resistance on the monthly time frame, and I scale down to the weekly time frame to catch the overall trend. If it is in a downtrend, I'm looking for sales. If it is in the uptrend, I'm looking for buys. And I scale down to the daily time frame, and I'm going to zoom out on the daily time frame as well to make sure the daily matches the weekly trend. Then on the daily time frame, that's where I spend the most amount of my time to do my TAs. If the market is in an uptrend, I'm going to place my key structures using the rectangle boxes. Right, uptrend, you get higher highs and higher lows. You have a low, high, higher low, higher low, higher high. And your only job is to not place any sales, right? Do not go against the trend. Wait for the market to drop to create the next higher low for you to get in. And how do you know where the higher low is going to be created in this scenario, right? I'm not looking for no sales. All I'm going to do is grab my fib, right? Place it from the most recent higher low to the most recent higher high, right? And then I'm going to wait for the market to drop between the 50 and the 61% level to create some type of support, right here, right? So once it does drop to that level, that's when I'm going to start looking for a buy. But yet again, you do not place the buy as soon as the market drops to that level, right? You need to see the market create some type of support there, as in reject, 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 reject. Once you see that on a daily time frame, you're going to scale down to the 4-hour time frame. It goes down to the 4-hour time frame, and you must wait to get some type of bullish engulfing or any indication that sellers are no longer in control, right? And then after you got your confluence on the 4-hour time frame, you're going to scale on the 1-hour time frame, right? And then you're going to draw your small downtrend, and then you're going to wait for the market to break above the small downtrend. Then that should be the ultimate confirmation telling you it is good to go for you to place a buy, right? So once you place your buy, right, you're going to ride it all the way up to the 0% for your TP, and your stop loss should be on average minus 50 pips below my higher low. Stop loss will be about 50 pips. Let's grab this low cross. Stop loss will be somewhere around this area right here, 50 pips. And my TP is going to be at the 0%, which is, as you guys can see, 250 pips, right? That is over a 1 to 3 risk to reward ratio, meaning it is very crucial, guys, to have a positive risk to reward ratio, which means, guys, if you're risking $1, you have to make at least $3. That's how I trade, right? If you're risking minus 50 pips, at the very least, you should catch at least 150 pips. That way, guys, you can lose 3 trades in a row, minus 50, minus 50, minus 50, which is minus 150 pips. But the minute you win one trade, you'll be at least at break even or even in profit, right? So that is exactly how I trade, right? I trade with the trend, I trade with structure, and I use a fib as a tool to precisely tell me exactly when to get in. And I scale down to the 4-hour time frame to look for some type of bullish engulfing if I'm looking for a buy, or bearish engulfing if I'm looking for a sell. And then I scale down to the 1-hour time frame, right? To make sure the 1 hour is also going to be in an uptrend, something like this, right? Break, retest, and now I know for sure that the market is about to shoot up, if that makes sense, right? So I'm going to find a sell example for you guys, right? This might seem quite a lot of information to take all at once, and this is why it is a course, which means you guys can watch this video over and over again, and you can go ahead and open a demo account and practice it as well, right? All right, so I'm going to go over like a sell example as well. And we're currently looking at Euro AUD, right? That's a monthly time frame. That's where I start my analysis, which is the highest time frame on MetaTrader 5. On the monthly time frame, guys, yet again, I'm going to add my key resistance and support levels. We have 1, 2, 3 touches there. Then I'm going to find my support level, right? Our support level will be this. We have 1, 2, 3, 4 touches there. That's all I do in the monthly time frame, right? So now I'm going to scale down to the weekly time frame. On the weekly time frame, guys, as you can see, the lines that we added on the monthly time frame are very much so valid on the weekly time frame, right? So we know for a fact that every time the market goes for that level at 1.79912, it is going to react to it. As you can see, reject, 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 but dumping. And we know for a fact that every time the market goes for this level down there, which is a support level at 1.76, at 1.74602, sorry, it is going to react to it. As you can see, reject, 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 and went all the way up, right? And I'm going to zoom out on the weekly time frame. As you can see on the weekly time frame, the market was right. The market wasn't in an uptrend. The reason I'm saying wasn't in an uptrend. If you do draw your trend, right, you'll see something like this, right? So which means the market is no longer trending up anymore on the weekly time frame, right? So that's all on the weekly time frame. I'm going to scale down to the daily time frame. The daily time frame should tell us everything that we need to know, right? So as you can see, if you zoom all the way in on the daily time frame, you can see the market was giving you a low, a high, a higher low, a higher high, a higher low, a higher high, and a higher low. So which means the market was in a crazy uptrend, right? So we're going to grab our rectangle boxes, right? We're going to have to place the low, right? We're going to have to place a high, right? We're going to have to place a higher low, right? We're going to have to place a higher high right here, right? We're going to have to place a higher low, right? We're going to have to place a higher high. So we have a low, high, higher low, higher high, higher low, higher high. I'm going to place my next higher low. And this is why, guys, it is very crucial to watch all the previous videos because you should be able to tell when the market reverses, right? As you can see, the market give us a low, a high, a higher low, a higher high, a higher low, a higher high, another higher low. But guess what happened, guys, right? The market decided to break the trend, right? If you draw your trend like this, right? Touch, went all the way up, touch, went all the way up, touch, went all the way up. The market decided to break the trend, right? Not only broke the trend, the market decided to go all the way up, guys, to create a what, right? So if you guys watch my previous videos, you guys should know what type of structure that is, right? So to confirm a reversal, guys, the market must not only break the trend, but also to create the opposite structure of the uptrend, which was a higher low, the market must create a lower high. And that's when we know that the market is about to drop. As you can see, after the market created a higher low, went all the way up, right? Because the market was supposed to go all the way up to create the next higher high, just like this, right? Went all the way up to give you a high high, went all the way up to give you a high high. But instead, guys, the market went all the way up, but closed below the previous structure, the previous higher high, to create a lower high. Right. So it is very crucial, guys, to go over the market structure video that I made so we can properly study market structure. Right. As you can see, the market went all the way up to create a lower high. If you grab your fib, right, place it from the high now to the low, right? The market went all the way up to the 61% level. Give you one, two, three, four touches between the 15 and the 61% level. Guess what, guys? It sold, went all the way down. It would have smashed your TP. Remember, guys, if you're getting at the 61 or 50% level, the 0% level is going to be your TP1. Went all the way down to smash your TP at the 0% and minus 27% would be your TP2, right? So as you guys can clearly see, the market is no longer trending up on a daily time frame, right? It is now trending down, not just because of break of the trend, but also because the market went all the way up to create the opposite structure of the uptrend, which is a lower high, right? And that's how you should be able to trade the downtrend, guys. On the downtrend, you're going to grab your fib, right? You're going to place the fib from the high all the way down to the low, right? It's going to be from the 100% fib level to the 0% fib level, and you're going to wait for the market to create some type of, and you're going to wait for the market to retrace, and to create some type of resistance level between the 50 and the 61% level. As you can see, the market went all the way up to create that resistance level right here, right? So that's the resistance level between the 50 and 61% level. You have one, two, three, four touches there, right? And then guess what happened? The market sold and it went all the way down to smash your TP at the 0%, right? So now let's go down to the 4 hour time frame. So remember, guys, you take your time to analyze the daily time frame, right? That's where you place your key structures using the rectangle boxes. That's where you place the fib from the high to the low, and wait for the market to create the opposite structure of an uptrend, which is a lower high, right? Once you realize the market is at the 61% on the daily time frame, right? You're gonna have to scale down to the 4 hour time frame. Around the 4 hour time frame, as you can see, guys, around the 4 hour time frame, the market went all the way up to the 61% level, right? Buyers were in control. Buyers were in control. Guess what happened? Massive, massive, massive bearish engulfing. Remember, guys, on the 4 hour time frame, we look for buyers to lose. On the 4 hour time frame, guys, if you're looking for a sell, you're going to look for buyers to lose momentum and for sellers to come in, right? Literally the opposite of what we went over for the buy setup, right? So bearish engulfing, telling you, bearish engulfing, which is that red candle, that big red candlestick, which pretty much engulfed the previous green candlestick. That is the bearish engulfing, right? That is a great confluence telling us the market is about to drop, right? So 61% level. And now, again, guys, cut down to the 1 hour time frame. 1 hour time frame, you're going to draw your small uptrend, right? Small uptrend, as you can see right here. Let me place it properly. The market dropped below it. It's also the ultimate confirmation telling you that the market was about to hit your TP1, right? So at the 61% level, you can call it quote unquote a sniper entry. That's where you should be getting in. Because as you can see on the 4 hour time frame, the market created a bearish engulfing, right? You get in at the 61% level, right? Stop loss 50 pips above the 61% level, typically at the 78.6, right? At the 78.6% level, right? You get in here, stop loss about 50 pips above the previous structure, right? TP1 should be at the 0%, guys, if that makes sense, right? So that is pretty much how I trade, right? I trade with the trend, I trade with structure, and I'm very, 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 very patient. And I wait for the market to come to me at all times, right? And also, guys, like I stated before, you're gonna have to use all the confluences that I taught you guys in the previous videos. For example, guys, right? This was an easy head and shoulder pattern, right? So you have the head right here, right? You have the left shoulder, right? Right here, right? And then you have the right shoulder right there, which is a clear indication that the market was about to drop. That is a reversal pattern. You have the head, you have the left shoulder, and you'll be selling at the right shoulder right here, if that makes sense, right? So that is pretty much how you place a sell on a downtrend, right? So in a downtrend, guys, you're gonna have to place your key structure from the high to the low, and you're gonna have to wait for the market to create the lower high for you to get in between the 61 and for you to get in between the 50 and the 61% level. But yet again, we do not automatically place a buy or a sell at the 50 or the 61% level, right? If you're looking for a sell, right, make sure you go on a daily time frame, make sure you wait for the market to create a resistance level between the 50 and the 61% level. Then you scale down to the 4 hour time frame. If you're looking for a sell, you'd realize that buyers are in control, buyers are in control, buyers are in control. And then you wait for the market to create something about bearish engulfing, telling you that sellers took over. You wait for buyers to lose momentum. The easiest way to tell is you would notice that the market would create something about bearish engulfing if you're looking for a sell. As you can see, bearish engulfing. And that's when you can place your buy and you place your stop loss about 50 pips above the previous structure, above the lower high. And even better yet, you can scale down to the 1 hour time frame as well. You can draw a small uptrend if you're looking for a sell, and you wait for the market to break below the small uptrend. As you can see, the market broke below the small uptrend and went all the way up again to create the next lower high. Then you can place the sell right here and TP at the 0%, right? So that is exactly how I trade every single time, and it has been working for me for years, right? The market is currently trending down on a daily time frame. You look for sales and sales only. If the market is trending up on the weekly time, on the daily time frame, you look for buys and buys only, right? You will be buying at the higher low and you'll be selling at the lower high, right? The higher low or the lower high is going to be created between the 50 and the 61% level, but you must wait for buyers to lose momentum, as in like you must see some type of bearish engulfing, and you must see less and less a green candlestick, the 50 and the 61% level, right? And you must wait for the market to create some type of resistance level at the 50 and the 61% level for you to start thinking about selling if the market is in a downtrend. And the same thing if the market is in an uptrend, right? So that is pretty much how I trade every single time, guys. And yet again, if you just bought the course and not part of the Bowman FX mentorship program, you can easily find me on Instagram at MinoBowman or at BowmanFX. Please send me a DM and I can get you started with a personalized mentorship, right? So thank you guys for watching this video and I'll catch you guys in the next one.